All right. Welcome back to another episode of the Real Estate Investing Club. It is mid-February. I can't believe we're already closing in on tax season, my favorite time of the year. Just kidding, not. But it's going to be a good day because we have Dr. Noel Liu with us, who runs Secure Dental with multiple locations. I'm super excited to jump into this because I'm sure he has a very unique perspective on commercial properties and how to get the most out of them. And I do have to apologize before we get into this. I have been kicking a cold. It's been going around, so my voice sounds a little bit different, but I personally am okay. But with that said, we're going to jump right into this. Noel, thank you very much for hopping on the show.
Hey, Gabe, thanks so much. And it's a pleasure and honor to be here with you. Really looking forward to share my experience.
Yeah, absolutely. I like your shirt, by the way, Crushing.
This is a shirt that I got from the Brad Sumrock event.
Nice. All right. Well, hey, I told you before we got on here, we like to start with stories. So take us to the beginning of your real estate story. How'd you get started in real estate?
Oh, absolutely. That's a great starting point. So I'm a general dentist by trade, and we've been working in our practices for the last over a decade. One of those things that really, really was bothering me was I needed to invest. And the question that always popped up was, how do I invest? Where do I invest in? So, like many of our colleagues, we always have this issue of the traditional route, like, stocks and bonds and mutual funds. And those never actually got me excited. And my real estate journey just started about like maybe 3.5 years ago,
Okay.
something along those lines where I saw Grant Cardone and his thing was, hey, you know what, come up to my summit and we will, kick it off and you'll be able to invest. Little did I know, I signed up. This was like in the summer, like right before, I would say right along, when it was COVID. I signed up and I went in there and Gabe, I was the only dentist over there out of 2,500 people, right?
Really? That's
Right.
surprising.
And I know there were a few doctors. A cardiologist was like right next to me. And that's where I started meeting a lot of people. I did not know what to wear, what to say, what to, do any of that stuff. Trust me, I did not even know what a cap rate was, right? I just went in there and I just indulged myself. And this is one of those stories that I like to tell my colleagues is that if you don't understand something, learn it, get educated, and just immerse yourself.
Just
And that's
dive
how I
in.
got started. Right. And it's been like, like really fun because all the people, all the connections I made over there that day, we still are in touch and that's how, we are getting into deals, we are talking real estate, we're doing a lot of the meetups and it's been awesome ever since.
Cool,
And
man.
myself, I got into many deals this way.
Nice. I love it. I've wanted to go to one of the Grant Cardone events. I know he's kind of a polarizing figure in real estate, but I like his personality. I just think it's
Yeah.
fun. And the events, they seem like they're I don't know, I wanted to go to it. It was pretty good.
You either love him or you hate him.
Yep,
There's
exactly.
no in between, right? No, so yeah, it's really, really good. I love what he teaches and I love his mindset. A lot of people shoot the messenger, right? But I'm like, hey, how about we just listen to what he has to say? And with his experience and his network, it's amazing what he does.
Yeah, and you can't really deny his success in real estate. And anybody who doesn't
Absolutely
matter who
not.
they are, if they've reached that pinnacle of success, they've got things to say that you probably should listen to. And so um
Unless you reach that level, then that's a different story, right?
yeah, there you go. There you go. All right. So 3 years ago, so you're kind of, I wouldn't say new into real estate, but newer than a lot of people out
Correct.
there. So you got a fresh opinion. What was your first foray into real estate? Once you took that seminar and you
Mhm.
decided, I'm going to go out there, I'm going to invest. Did you buy single family, multifamily? Grant Cardone, I would assume it's multifamily. What was your
Correct,
first
correct.
step?
You know, um, from there, what I heard was everyone was telling me, hey, avoid single families, right? Avoid short-term rentals, avoid all this stuff. Now, as I look back, everybody has their own pros and cons.
Yeah.
It's not like it's all bad. It's not like it's all good.
Yeah.
I started with Cardone Enterprises and then Cardone Capital, and that's where my first deal was as an LP with him.
Oh, okay.
So I started with him, and I was looking at return. Okay, it's kind of small, but knock wood. To this day, I'm still getting what I'm supposed to be getting, so I can't say anything bad about it. But then after that, I started venturing into a little bit more of the syndication world, and that's where I started meeting a lot of other GP group guys and companies and whatnot. Then I stumbled across Brad Sumrock, and that's where I really wanted to learn. And with the Sumrock group, I just indulged the whole 9 yard. Right, I went all in. I went with being a mastermind student. From there, then I went to becoming his personal mentoring student. Then I joined the one-on-one with him, and it was like pretty much drinking out of a water, out of a fire hose, right? All this information popping up for somebody new like me. But I knew deep in my heart that if I wanted to learn this trade really well, I need to surround myself to accelerate time, because if all these guys have decades of experience, how do I take their experience and morph it into mine? And that's what I started doing. Was then I started my first co-GP deal. Then I started investing as more as an LP, and that's how I started rolling with multiple people and multiple deals, and still in right now and still actively looking.
Very cool. So are you only doing uh multifamily, or I mean you own a number of your practices, I'm assuming, the buildings that you live in. I know that you're the tenant in those buildings, but have you looked at other commercial assets?
At this time, my favorite one right now is Flex Industrial.
Ah, yeah, there we go.
You
That's
know,
a good one.
that's I love that one because I'm invested with one of them. Then I'm really invested. I really think I'm investing in one of my buddy and partners, Tom Varghese. So we run a Facebook group, and he and his buddy, they're invested in Georgia, and that thing has been like a cash flow machine.
Nice.
It's like 1,000 to 1,200 square feet, and everybody wants to rent it because they are like always so full, and they have a waiting list going on. So that's like my best thing right now, apart from multifamily. So multifamily, I just took a little break right now for the last 10 months, kind of stepped away from a little bit, and right now I'm just focusing mainly on this right here, the flex, and I'm also involved in another deal in Toronto, Canada, believe it or not, with this other partner of mine, plexes over there.
Okay. You cut out just on the very last thing. What are you doing in Toronto?
So Toronto, I'm partnered with this other guy, Jaden, and they do like build out those four plexes.
Oh,
So they're
okay.
taking out really old homes, getting city approval, making it all green, and getting like a 50-year term on the loan, which is crazy, unheard of.
A 50-year term? That's
50-year
crazy.
amortization, right?
Jesus.
I know. So
That must
cash
be
flow
a
is great
Canadian
in
thing.
there.
I've never heard of that in what in the US.
It's not even common over there. It's just this code where they have to really bypass, which is really hard, a lot of red tapes. And he got him through because he works for this green energy company, and they got it through.
Hmm.
They got this loan approved, and they're building their fourplex. And
All
the
right.
rents are like astronomical. It's like around 4 to 5K a month
Yeah,
on
Toronto.
those apartments.
Toronto is crazy. It's one of those markets that's just like, San Francisco, like gone through the roof. But
Yeah,
if you can turn a single into a quad, that's I'm sure the numbers make sense there.
makes a lot of sense because their NOI was coming up to like 240K a year, which is unheard of, like on a fourplex
240K for a fourplex?
or a fourplex.
That's crazy.
So
That's
how they did it is a fourplex, and then they have like a big unit in the back, which is called a laneway suite, and that laneway suite that rent is around like 6K a month.
okay. So it's 5 units essentially.
5 units, right? Five
Yeah.
units.
Yeah. Still 240 for 5 units. That's you're sitting
That's
pretty
amazing.
with that NOI. Awesome. So you're in Flex Industrial, you're in sounds like small multis. Are you running any of these deals yourself? Are you the primary GP, or is most of these?
No, I'm not a primary GP in any of these deals, and the reason because I got an active business that I'm running here, right?
Yeah, that
My
makes
dental
sense.
practices, and this is a message actually to all our colleagues as well, that our main thing should be our main thing,
Mm,
and not trying to jiggle between main business and real estate. Otherwise, none of them work out. I feel like I would have probably suffered if I did both.
yeah, makes
Right. So
sense.
what I do a lot of times is I'm partnering up with strong general partners. I'm partnering up with strong operators, people with great track record. Their past returns has been like astronomical. That's where I'm really like focused on, or just invest as LPs.
Yeah, yeah, that makes sense. And I like what you said. The main thing should be the main thing. I think that's true not only in between different careers, but in real estate. If you're focused on flex industrial, focus on flex industrial, get good at
There
it.
you go.
Don't try to, dabble in single family and multifamily and short term, all that stuff. I definitely had the shiny object syndrome when I first got into real estate, and I tried it all, but I quickly realized that you need to choose one asset and really understand it well for you to get
I
the
love
best
it.
returns.
100%.
So if you're looking into the future, the next 5 years, what does a successful investing career look like to you?
So the next 5 years, I'm looking to create a fund. So fund a fund and basically taking that and hosting it, and opening up opportunities for our colleagues, dentists and doctors, and then
Very
looking
cool.
for them because I see a lot of guys like me who is trying to invest, but they don't know where to invest. So this alternative investment strategy, I think it works best for, these busy professionals like myself.
Yeah.
So I think that's probably going to be the next thing in the next 5 years. That's where my eyes are to do like different asset classes, but mainly focusing on flex industrial.
Very cool. And so you're opening a fund, and you would source the GPs essentially, and figure out where to place the capital.
Correct. Correct.
Nice. I love it. Cool, man. And so flex industrial is that going to be your main focus?
As of now, flex industrial will be my main focus. The other focus would be retail strip mall plazas. Again, with my dental associates. A lot of times we find these places, especially with my dentist or dental friends, who's looking for a space, and the best way to do it is go out there, find a space for them, do the TI, get them up and running, and basically, I'm owning the real estate and they are renting it out for me.
Oh, okay.
So to a point where, because a lot of them, they have this cash flow issue initially when you're opening up a practice, because you got to borrow like $1 million for the build out, for example,
Oh,
to build
wow.
it out, right? And now the
Oh, and
cost of
that
real estate.
includes all of the like medical equipment, I'm assuming.
Exactly, exactly. And then the real estate component, that's adding like an extra dead weight to the practice. So the banks, the way they look at it is they add the equity from the real estate, they'll look at the lien from the real estate, the loans, and then they'll look at the loan from the practice build out. They'll kind of merge them together.
Mm.
So they put everything under one collateral. And I think that's like the biggest mistake a lot of people make in our profession. So if they have somebody else own the real estate component, still with an option to buy down the road,
Oh, okay.
I think
Oh,
that's a
lease option. Yeah.
correct, correct. And
Nice.
then I think that's the best of both worlds.
Yeah, makes sense. And so you go in and buy the entire strip, not just one location within that strip.
Correct.
Interesting. Retail strips malls, that's one thing that I know nothing about, and I've been interested. We just talked about shiny object syndrome. This is one of the shiny objects that I've considered over the years. So have you gone through full cycle on
Uh,
any of those projects, or do you?
Actually, I'm doing like a case study on my own first,
Okay.
and I've noticed that the minute they find out there's a dentist or a healthcare provider in that building, automatically that appraisal value just skyrockets.
Skyrockets? Yeah, I would
Just
imagine.
skyrockets.
Huh.
So I'm doing my test study right now, and I'll see like how it goes. Partnering up with a few guys who actually are really really good with triple nets,
Hmm.
and that's where my strength is. Identify these people and just partner with them, because for me, those guys are going to be like assets, right? They'll know what the ins and outs and what to do and what not to do,
Yeah.
versus me trying to do it myself and learning the hard way.
So how do you go about identifying the actual locations? I mean, do you have VAs that work for you that kind of skip trace the different assets, or
Well, the VAs are like one aspect, but mainly having relationships with dental brokers.
mm-hmm.
And I think that's like a huge influx of deals or opportunities that flow in
Yeah,
from all over the state, for example. So I'm in Illinois right now, so I have a lot of deal flow with Illinois.
that
But
makes
if I
sense.
were to look at another city, then maybe create relationships down there.
Yep. And so you're sticking within the state of Illinois for now.
For now, for investment purposes, in terms of the strip plazas, but anything else like outside, then I'll have to redo the whole groundwork again.
Yeah.
Yeah.
Yeah, flex industrial is great because I mean, any major metro you can find really good assets. The problem is that cap rates have been going down really low for flex. Have you guys found anything good recently?
No, no. And I feel like this is again another opportunity where I think partnering up with some sort of a developer, like, guys who are actually into development of flex industrial. That's the way to do it because that's the time you get the first dip. There's a
Yeah.
little bit work to it, of course, but the upside it's a lot more
Yeah.
versus you buying a cash flow property and then it's like, what do you pay for it, right?
Yeah, exactly. What cap are you getting it at?
Right.
Yeah. And I mean, I don't know anything about developing flex industrial, but I would imagine it's a little bit simpler than other assets just because it's like a self storage facility. That's what I do. It's just walls, a roof, and you got maybe an office in the front.
Correct.
So cool. All right. I just took a peek at the clock. It looks like we have run it down. It's time to jump into the quick question round. Are you ready?
Let's do it.
Let's do it. It starts with books or really any form of education, could be YouTube channels, Netflix shows, documentaries, whatever. Give me two recommendations, one for general life wisdom and then one for real estate.
One for real estate, everyone's favorite, Kiyosaki.
Rich Dad, Poor Dad.
There you go.
There you go. That's
Everyone's
a good one.
favorite
It's
there.
a classic recommendation, and it's been suggested many times on this podcast, but yeah, rightfully
Yeah,
so because it's a great
it
place to
is. It
start.
is. It's like we call it the Holy Grail, right?
Yep. All
And
right,
then
so
the
that's
other
real
book,
estate. Yeah,
yeah, and then the other book, like outside real estate, is it's Bob Proctor. That's my other favorite.
Bob Proctor. Yeah, he's really good. What I actually don't know any of his books. I've heard him speak a number of times, but what are the books that he's written?
A whole bunch of them. So the latest one that I'm listening to right now, it's after he passed away, is the Ultimate Collection
Oh,
of
okay.
Bob Proctor.
Yeah.
And then the other one is the art and science of getting rich,
Oh, okay. I feel
where
like
he
I've heard
speaks
of
a
that.
lot about the mindset and what do you need to do. So
Yeah,
those are my two favorite books.
yeah, yeah. Bob Proctor is really good. I used to really like Zig Ziglar growing up. Um,
Oh,
I feel
yeah.
like they have a similar vibe. All right, next question is for your younger self. Let's go back to the Noel who, a short 3 years ago, who had no experience in real estate. Go back to him, look him in the eye, give him one piece of advice moving forward.
If I were to go back, I would say start saving, start investing, and not blow it up on dumb things.
Once you first start to get money, it's really hard not to blow it up on dumb things. But I'm gonna put that in the I wish I got started earlier bucket. We kind of have a running tally on this show on the
Yeah.
number of people who say they wish they got started earlier because it's a lot. And so every time somebody says it, I turn it around to the people listening, you guys out there. If you're on the fence and you're thinking about getting into real estate, this is this is a message directly to you. Now is
Mhm.
the time. Just go out there, get involved, get started. Don't stop reading books. And it's good to get education, but just go out there and get something done because everybody who's come on this podcast wishes they got started earlier. So now is the time for you.
I always say like an ounce of action, it's worth or weighs more than a pound of just analyzing.
Yep.
And
Yeah.
that's where a lot of
Absolutely.
people get paralysis, syndrome. That paralysis syndrome. It's like, how do you take action?
Yeah. Yeah. And it's really hard in real estate because real estate is, a big portion of analysis. And so you feel like you're doing something when you're analyzing properties, but it really doesn't matter until the rubber hits the road and you actually sign those purchase
Right.
agreements.
Absolutely.
All right, next question is about the US. It's a big place, a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Texas.
Texas. Okay. I'm going to force your hand here and boil it down to one city in Texas that you like.
One city in Texas would be Dallas.
Dallas Fort Worth. All right, that's a good one. Dallas Fort Worth. I own a couple properties out there. Great metro. It's crazy just the size of that city. It's every time I fly
Right.
in there, I'm just like, Jesus Christ, this is a big ass city.
The reason I say Dallas is because if you look at a whole, absolutely. But are there pockets where there are good ones and bad ones? Yes, definitely. We have to look further deep down. But as a whole, in general, Dallas, Texas.
Yeah, it's a good metro. All right, next question is about finding deals. It all starts with getting in contact with the seller, signing that purchase agreement. So, what is your favorite way to? I'm going to have you answer this two ways. One, to find new deals, and then two, to find new GPs.
My new GPs, I'll start with the GPs first. My new GPs is very simple. It's pretty much all the relationships that I've made over the last 3 years, and really getting into the summit and the events and knowing these guys and like what do you call it, the mastermind group,
Mm,
where we kind of know them exactly how they react and act during stress times and what kind of stuff they do, like personal life, what kind of jobs do they hold, any businesses they own. So that is my criteria for getting GPs. Or if somebody new, then looking at the track record and of course the character. That's really important for me. It kind of trumps the deal at all
yeah,
times.
makes sense.
Finding new deals again through these events, through summits, and getting to know a lot of people.
Yep. So both of those answers sound like networking or building
Networking,
relationships.
networking, networking.
Yep. Yeah, so important in real estate, in any career really, but in real estate, I feel it is doubly so
Oh,
important.
100%.
Yeah. All right, that brings us to the second to last question. This is about lessons learned. I know you probably don't have too many deals that have gone full cycle, but let's dig into the past and think about the deals that a wrench was thrown into the mix and things didn't go exactly as planned. In those opportunities, that's where you learn the biggest lessons. So go
Yeah.
back to a deal that went a little bit sideways, and then what was the biggest lesson that you pulled from it?
Currently, I think I have like a deal or two that's kind of like struggling a little bit. And one of those things is it's not doing my proper due diligence.
Mm,
And this was like the first initial deals that I started with as an LP, not knowing the GPs exactly, not knowing their net worth, their background. So sorry to say, but everyone can get affected through this, which is a capital call.
yeah.
And that's one of those things where it happened. But the lesson that I learned from is number one, know your team, know the operators, know the asset managers, like who's going to be managing the property. And then number two, I would say the most important thing is know the debt structure in the deal. That's what the two deals that I'm in right now, which got in trouble, it's because of the debt structure. So that's another thing I would say as LPs to just do the due diligence.
Yep. And when he says capital call, that means that when you buy a property, you raise X amount of money, X amount of capital to buy it. So in this situation, it sounds like they didn't have the money that they needed once X number of years down the line. They ran out of money. They needed to go back to their investors and do a second raise. And you never want to do that as a GP because investors are not
Never,
happy.
never.
So that's a good lesson. Well, and what was the biggest lesson there? Oh, due diligence. Due diligence on the property sounds like, and also on the GPs.
The
Very important.
GPs.
I feel like the GP side is probably more difficult to do due diligence on because properties, they're pretty easy. All the information's out there. GPs,
Exactly.
there's a character component, and you really got to know what you're getting into.
With the property, we just got to know, like, hey, if the rent's going to be raised, like, what are we looking at, and how is that going to happen, and what is the negative impact if you're going to raise rents? Is that going to increase occupancy? And that's one of those things where we never look into it till we're in the deal.
Yeah.
It looks really nice that you're going to increase the rent, the NOI is going to go up, everything's going to go up, but what happens is the negative side effect is people start moving out.
Yep.
Right.
Yeah, we got to watch out for pro formas because people all I feel like every pro forma I see they assume a rent increase, and then they don't really account for any eventuality once you do increase the rents, and if the market will even support the rents that are being increased, like will it support that level that you're expecting it to reach? A lot of variables there, so you got to watch out.
Yeah, especially with the underwriting. Gotta know the underwriting inside out.
Yep. All right, that leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. Two-part question: where can they find you, and then what can they expect when they reach out?
Well, you can look me up on Instagram, Dr. DrNoelLiu. And my Facebook is Noel Liu DDS. That's my Facebook. And definitely reach out if there's any question regarding real estate investing as an LP, what to look for, what not to look for. Like I said earlier, we run a Facebook group for dentists and doctors, and we get tons of questions over there, what to do and what not to do as initial investors. So anyone in my shoe, like who's looking into investing in real estate for the first time, maybe I can help with some guidance, and that's what they can expect.
Perfect. All right, I will put those links in the show notes. So if y'all want to reach out, just click a little more in the description. It'll pull down that full description, and in there you can find Dr. Noel's links. All right, that wraps it up. Noel, thank you very much for hopping on the show.
Hey, Gabe, I appreciate it. It was an honor. It was a great conversation we had. Thank you.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at the realestateinvestingclub.com. If you want to support the show, just give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.